All right, tomorrow we are waiting on the personal consumer expenditure report, which comes out at 4:30 a.m. Eastern Standard Time. If we find out that people have less money, spending habits have contracted, well, then the Fed's going to have another reason to loosen up on the brake that he's put on the economy with the high interest rates. And that could cause the market to go up, right? But on the other end of things, if people's spending habits have actually increased, then it means that the economy is strong and the Fed needs to keep the brakes on. But that actually would be good for big tech. Companies like Amazon, Google, and Apple and NVDA would still have the opportunity to go higher. Now, as we're moving towards that important data report, I've showed you guys many times on the S&P 500 as measured by the SPY that we're in an ascending wedge, and we've got three things that we're watching. We're watching the trend, which is the price, we're watching the volume, which is the strength, and we're watching the RSI, which is the momentum of acceleration. Now, I've told you before, as we're going into tomorrow, that we've got bearish divergence on important metrics, which mean that we're only going up in price on less volume and lower momentum. Now, we can continue to rise in that type of environment, and so this is not a notice to sell everything you own, but it is for you guys to be aware that we could move from the top of that channel, that top of that ascending wedge, to the bottom of that ascending wedge, which would only be at this point a 2.3% move, which is actually somewhat typical for the market to do even as it continues to climb. So we're going to be keeping our eye on that, but there is more risk going into tomorrow. I know myself and some other traders I've spoken to are really taking risk off and waiting to see how the market responds tomorrow, because the bottom line is if the market likes the data report and it begins to pop, there'll be plenty of room to ride that move higher throughout the end of the day going into the weekend. But again, I'd be taking profits if we did pop going into the weekend, because again, we're at the top of the move. All right, that's just our intro. This is the Stocks with Josh show. Thank you guys for hitting the like. Thank you for being here today. Hit that like and that subscribe and just drop me a heart and say hi in the comment. I want to give a shout out to the Stocks with Josh Discord, where I've been dropping a ton of charts. The three plays that I'm going to share with you guys today, I dropped the charts in there earlier today and was answering questions on them. And I'm going to get to those in just a minute. But if you do not know what the Stocks with Josh Discord is, I'm going to leave a link in the top pinned comment. That's where I'm sharing trades every day, sharing charts every day, and answering questions. So hit that link, check it out for yourself. Would love to see you over there. Okay, I wanted to ask this question. Are you guys trying to make daily profits either scalping options or swing trading stocks? If you answer yes to that question, then I want to break some things down for you, because we need to lay the foundation for what is the game plan, how do you achieve that, what are the 4 steps to establishing a trading strategy. The first thing that you need to have in order is you actually need to have time to trade. Now, a lot of you guys are working full-time jobs, and so what you need to do is actually just accept that limitation. If you cannot free up the first couple hours of the market open to trade, then you really aren't in a position to scalp options, because you need to be able to sit there and watch every single candle open and close to be able to get in and to get out. And so I want you to be aware. First step to a trading strategy is have the time to trade. The second one, especially for a beginning trader, is to have a focus. And what's important about that? Because what I'm finding is a lot of people are chasing whatever stock seems to be popping off. It's kind of the lottery ticket mentality of what's moving today and how could I get rich with it. But the problem with that strategy, not having a clearly defined focus or area of expertise, is that you quickly learn after you jump in what you didn't know about it. The lesson to be learned there is that when you are not in the stock, you don't necessarily see it correctly, and you're wearing what I'd say is rose-colored glasses. But as soon as you actually buy into it, those rose-colored glasses come off and you begin to get money eyes, and you begin to realize what you didn't know about it. And so what you need is a focus. And what I would suggest for you guys that are beginning to learn how to trade is to consider just trading the SPY or the QQQ and mastering it. Just focus on one thing. Learn how it moves up and down and just master that one thing before trying to tackle all of Wall Street. The third thing that you need is actually a trade setup. Now, this would be relating to charting and signals. You need to have some form of a strategy. It could be any, because there's so many indicators. For example, as far as indicators and charting go, you could use the 20 EMA strategy, which is simply a buy signal that gets printed the minute the price crosses over the 20 20 EMA. You could use that one strategy on any chart and find a way of consistently making money, but you need a strategy. You can't just trade a stock with no plan whatsoever. And then the third thing that you need is some semblance of what I'd call confluence, which means that you've got to find more than one reason to do what you're doing. For instance, if you're going to trade the 20 EMA, you want to make sure that the stock is above the 50, the 100, and the 200-day moving average, meaning that it's largely in a bull trend. And so that would be one reason that you would trade the 20 EMA strategy. You also want to consider the RSI. If you're above the 50% level on the RSI, it means you're in the bull territory. So you want to find confluence for your trade setups. I've been answering questions in the Discord, and folks are in trades where there really isn't a lot of confluence. I've analyzed some charts for them, and there was one reason to be bullish and maybe three reasons to be bearish. And so you want to create a trade plan that has multiple reasons for being bullish. Okay, once you get that down, then you need to have what I'd refer to as the 4 disciplines. You guys have heard them before, but I'm going to tell you that if you trade a stock, an option, or a crypto every single day, and you measure your success or failure against these 4 disciplines, you're going to realize that these truly are the secrets to making money every day. First, you want to trade the trend, which is the price. You want to be in something that's moving up. Second, you want to use a stop loss. That protects you from misdiagnosing the trend. It kicks you out and protects your capital. Number 3, if for some reason you choose not to use your stop loss, you want to control your position size, which also controls your risk. Whenever I'm not using a stop loss, the only other solution I have is to control my position size and minimize my stress if it doesn't go the direction I thought it would. And then number 4, you don't want to overtrade. This is one of the biggest mistakes that investors can make. They can second guess their strategy. If you have a pre-planned stop loss and it kicks you out, you stop for the day and you assess, what about my trade strategy did I get wrong? Did I really have more than one reason to enter this trade? Do I really know how this stock is moving? Those are your 4 disciplines, and I'm going to just top that off with what I'm going to call a cherry on the top of this quick class, and it's about 3 bad habits to avoid, and then we're going to get into the trade setups that I'm going to share with you guys tomorrow, and I'll show you the charts, and I'll show you why I'm thinking about getting into those trades. The 3 bad habits you want to avoid is being, I'd say, the bottom feeder on Wall Street. It's the guy that's always trying to buy the discounted clearance stock. It's sort of this idea of trying to buy the V-shaped recovery on everything. You hear bad news, the stock plummets, and you think, oh, it's on sale. Let me get a hold of this and take advantage of this because it might quickly turn around. This is a very bad habit. You want to be trading the trend. And if you're buying a stock to go long that just went down, well, then you're not trading the trend. And then the second is that V-shaped recovery. Guys, stop hoping for a V-shaped recovery. There are plenty of V-shaped recoveries in Wall Street, but you want to wait until you get that V-shaped recovery and make sure that it's just not a dead cat bounce and that it actually has some legs. And I'll tell you very simply how you know that. It breaks back above structure. So you've got to be able to snap those trend lines. And then the third thing you want to avoid if you're trying to learn how to master Wall Street is not always to be in what I'd refer to as the lump sum lotto play. You hear somebody like me on Wall Street say, I'm bullish about this or I'm bearish about it, and then you take all your resources and pile it into one trade, not necessarily having your own trade plan. Guys, that's a quick tutorial help you guys become more confident and to be more consistent investors and swing traders. If you've got any other disciplines that you feel have helped you become more of a consistent winner in your trading, and let me know in the comment section. Okay, we're going to quickly go over 3 charts. I'm going to give you guys my thoughts going into tomorrow about these particular stocks and what I'd like to see happen. Let me take you guys into the chart. Okay, the first trade that I want to go over that I'm watching very closely is Tesla because we've moved up quite a bit. Now, I gave a trade alert on Tesla when we got above 181 and closed. And this is another lesson real quick. You got to learn to hold your winners longer. I've got to learn to hold my winners longer. If I had held my full position when I gave that trade alert when we got above $181 in the Stocks with Josh Discord, it would have been a 550% return to the current price, which was much better than I cashed in because I began to sell along the way, which is not a bad discipline, but sometimes you've got to just take a little bit of extra time to read the direction. Even though you've made 150%, sometimes it's really great to step back and say, is this thing just going to continue to take off? Let me just babysit a little bit longer rather than look for the next hot trade. I want to point out what's going on with Tesla. We've got this descending channel, and I wanted to point out the three areas that we want to watch it. We want to watch the bottom of the channel, we want to watch the middle of the channel, and we want to watch the top of the channel, and it coincides with our support and resistance. We are very, very close to hitting this 199, and we have the opportunity right now to go as high as $206. We're going to be watching for candles with really tall wicks at the top to see if we get some form of a rejection. And if we fall back into this channel, then we'd be watching for a re-entry at the bottom, and we would be confirmed that we might be going back to the top if we get a candle that closes above the middle. So I just wanted you to see the areas of interest on the Tesla chart. Now let me quickly take you guys into NVIDIA. I called this in the Stocks with Josh Discord that we were in a inverse cup and handle potentially because we're consistently getting rejection on this half cup here, and we got perfect rejection at $126.20. This was a perfect area to go short today, and it would have been a nice profitable trade. Now I am looking for this trend to continue, for us to move down to $121 and potentially pop. The areas of interest are 121 and 118. Now, here's what I want you to understand. Part of the strategy is this cup. So if we open a candle outside the cup, then we've broken structure in a bullish way and we could be moving higher. That's why I've got this trend line pointing all the way up to 126 and 132. Those would be areas where I'd be watching to raise my stop loss and protect some of my gained money. But I also am concerned that we have not come down enough on NVIDIA. And so when we get up to this 132, which I perceive to be pretty heavy resistance, I'd be looking for rejection candles to see if we would ultimately get back to this other area of support, which is $111. Now, the last stock I want to talk with you guys about today is Walgreens, WBA. Now, this is one that I talked about a couple months back, that this was going to go into a long-term accumulation, and they've had nothing but bad news, and today they got terrible earnings. And the reason why they got terrible earnings is because of the actions of the new CEO, that he's done some things that Wall Street didn't think he should do, and that actually surprised Wall Street. Instead of focusing on maybe selling some of their profitable businesses and securing their cash position and paying down debt, that's something that Apple would do, Tim Cook would do. They said, we're just going to solve the solution by closing some more stores. And that does not send the right message to Wall Street. In addition to that, they said, don't expect better earnings and better revenue because, hey, we're closing those stores. And so it was a double hit to expectation, and the stock was absolutely punished. This thing is down 88% so far this year. Now, I have this set on a $10 a day buy, and I have wanted to accumulate this. We're already back to pricing that was created back in 1998. Walgreens has lost 24 years of share price appreciation. And so I do think it's an interesting play right now, but here's what I want you guys to take away. The trend is down. And so I'm controlling this trade by small position sizes. Now, I had a trade in it earlier when we were back at $20, but I also had a stop loss right beneath $20 that triggered, and then I put it on an automatic buy. And so the way that I'm managing this Walgreens is to control my position size, to keep track of it, and to accumulate very small pieces over time. I believe that if we do see some better management from Walgreens, there is the opportunity for a move back up to $20 or $30, but we do not have any bullish signal on Walgreens, so there's no confluence, and that wouldn't line up with our 4 trade strategies, which require more than one reason to go long on Walgreens. And just to be clear, with that news at hand, there is no buy signal on this stock. And if you were a lump sum investor, you've had a very bad day. If you are taking the risk of a slow accumulation, we need to watch what this new CEO does, because there may not be a strong plan moving forward. He could be trimming some unprofitable stores, or he could be presiding over the demise of this once great company that a lot of us were fond of shopping at odd hours of the night. All right, well, I will answer more questions about all three of these trades in the Stocks with Josh Discord, as well as giving updated technicals and times in which I'm going to be entering or exiting them. So to get those updates, click on the link in the top pinned comment and find me over in the Stocks with Josh Discord. Guys, thank you again for the like. Hit that subscribe. If you want to continue to get these types of trade setups, as well as learning the disciplines to being more consistently profitable, we'll do it together. Peace and blessings. Take care.